we're trying to put together when we buy names or names that we own, or even when we sell or what we're holding in the portfolios, have that trifecta that the fundamentals are sound, the backdrop is there, the macro, the context, the why to buy it's there, but also the when, and working with technical analysis, looking at supply and demand, looking at the heartbeat of the market to get those timing elements right. This is the Realize Your Wealth podcast by Aretec Wealth. We want you to be wealthy. We want you to feel wealthy. We want you to realize your wealth. All right, here we go. We're back. It's Friday. We're getting into the dog days of summer here. It's middle of August. It feels like maybe it's weather-wise it's cooling off a little bit. That sometimes happens in the city. You get to mid-August, it starts to feel like fall. But how you doing, Greg? What's going on? What's happening?
Yeah, just enjoying this this nicer weather. We have a big surprise birthday tomorrow for my mom at the cottage. We're having a
Oh,
big
wow.
party for her. So hopefully she doesn't watch this before then. Now, just thinking about it, but I think we'll be okay. But yeah, so just looking forward to that.
Well, we might have to edit that out then, depending on when the video gets released. But happy birthday, Janet! Happy birthday.
Yeah, yeah, yeah.
So
There you go.
no, that's awesome. That's awesome. But yeah, look, markets. We've had lots of conversation with clients because markets have been strong, especially the last few weeks. I know we had talks sort of ended July, that July was a little bit of a softer, slower month overall, that we had a bit of a correction in markets. And now August, it seems like so far, midpoint of August, things have just picked back up and resumed back up. And a lot of our position spots in the market have done quite well and have been moving along and humming along in the right direction. So it's been good to see strong August. So far, so good here.
Yeah, absolutely. So I saw TSX hit a record high, S&P hit a record high. Gold, which has been a little up and down this year, has really started to surge in August. So yeah, numbers are looking good, and our positioning will seems to be pretty strong here. But just kind of getting into what we want to kind of dive into today. So last week, Will, we talked about this concept of the Aretec triangle. So we touched on portfolio planning, behavioral finance side of things. This week, I think the idea is we want to dive more into the portfolio side of things. So we've touched on this before at different times, but really kind of the three components that go into our portfolio process and our strategy. So, I mean, maybe just from a high level, Will, do you kind of want to introduce those pillars as it relates to the portfolio strategy and process?
Yeah, we'll talk a little bit more about the philosophy and just trying to flush out things on the investment side to explain this a bit more for clients. But sort of three big picture ways I think about it is fundamentals, and then we also think big picture, the positioning of the portfolio, and then we use a lot of technicals as well. And I think all three of those work together because they answer really the what to buy, the kind of the why, and the context around buying it in the environment, and they also answer the when to buy, which is probably my favorite, the technical element. But I think one of the things when you think about our process, our philosophy, a lot of times, a lot of strategies, portfolio managers, it's very narrow, where it's a fundamental only, or it's only a macro view of the market, or it's purely a technical, a trading based view. But I think when you look at all three of those components, they work very well together, and each one supports the other. And the old way with technicals, the analogy which we've talked about before, is kind of playing the piano with both hands. So you've got fundamentals, which is the what to buy on one hand. You got technicals on the other. I think when you start to add in the idea of the why to buy it, the context, some of the macro positioning ideas that maybe starts to fill out the rest of the orchestra and the band and put some of the other pieces together where it's not just one instrument, and that's what a lot of the philosophy is about. We're trying to have these different pieces, different processes working together in the portfolio. But I want to start with fundamentals because that's probably the one that is most well understood, that people talk about the most. I think it's important, right? We always start with fundamentals. I just don't think it goes far enough, and there's a lot of um, advisors, investors that say, okay, if the fundamentals are good, that's enough. I would say there's lots of gaps in that thinking and problems with that. But let's talk a little bit about fundamentals first.
Yeah, so we
Start
always
with the
say
basics.
yeah, yeah, exactly. So we always start with fundamentals and we always kind of describe that that's kind of like our first layer or our first screen in our portfolio process. So maybe give us idea why that is and what do we mean by that?
Yeah, so if you're buying companies, sectors, or whole markets, I think you wanna be sure, you wanna be confident that you've got good companies, good businesses, attractive valuations, good earnings profile, things like strong dividends, strong growth profiles. Even when you go into sectors, when we're using ETFs and going and buying sectors and subsectors, we wanna make sure the fundamentals of that sector, even if it's not a specific company, and we're not going in and interviewing the management team and that sort of thing, or pouring through the balance sheet of a company. Because if we're buying an ETF, we're not going to do that. We still want the fundamentals, the basics, the valuation on, say, the sector and the market to be attractive, all those things. And I think that's just your basic building block, because if you're buying something that you can't make sense of the fundamentals, it's really hard, right? Even if you can make sense of some of the other parts of that, the portfolio management triangle, so to speak, you might be able to make sense of sort of the macro and the context of it. You might be able to even make sense of the technicals, like something like a SpaceX might be an example where
Mm.
I wouldn't probably say that today, but you might be able to make sense of technicals and look at like momentum and look at trend, but really hard to make sense of the fundamentals, the valuation, all those things. You may or may not be able to make sense of it from a macro kind of context standpoint as well. But if the fundamentals don't add up, you probably not an area you want to go and invest in. And I think that's kind of a basic building block to me. I think the challenge is when it comes to fundamentals, that's sort of the what to own. If you go and look at companies out there, like look at any analyst research report, almost universally, if you look at a list of stocks, they're all going to be listed as buys. 80% of the stocks are going to be buys. Any bank or research house list of companies, it's all buys. It's often skewed to their clients and their favored names that are the buy names. And there's almost never holds, let alone sells. But you're probably looking at 80% of the universe is a buy in a bank's research list. 15% of holds and maybe 5% to sell. So it's most of these companies, the fundamentals are there. And that's that. So my point is fundamentals. Like it's not hard to find a list of fundamentally sound companies. I just don't think that goes far enough. So that's where we start to layer on these other pillars in terms of the why do you buy, that broader positioning context, and also the when to buy, which is the technicals. So think of fundamentals as the what to buy. You want to be buying quality, high quality companies, high quality businesses, but in order to get the best results, purely fundamentals just don't go far enough.
Yeah, so at different times, we've talked about okay, fundamentals and then technicals, but we have this kind of middle piece that you kind of mentioned was the whole orchestra kind of brings everything together, which is the positioning. So maybe explain a little bit more about what you mean by that.
Yeah, so think of the positioning as the environment. And so that's some of these macro factors in terms of we've talked more and more this year, we've talked about things like, all right, well, where are we at in the market cycle? What's the big picture environment? What's going on with interest rates, what's going on with inflation, what's happening with commodities, what's happening with AI, semiconductors, really looking at that whole market environment, not only from a strategic standpoint, tactical standpoint. Is it risk on? Is it risk off? It's all those elements. The positioning is really about how are we positioned, what's going on in that big picture world of the markets. And I think that you could have you think about that is that you could have a fundamentally sound company that it's just maybe not the environment. It's not the right context to be buying it. It's not a market that is going to support that type of position or sector or area of the market overall. It's just not the environment. So think of that context, that middle piece about being well. Why would you buy it? Why would you not buy it? And I think you want the macro backdrop, the state of the world to help support that. Like gold's a good example that we've owned overall. I think there's good fundamental cases certainly for a lot of these gold companies. I also think when you look and you start to see the macro backdrop and lots of strategic reasons that investors have been buying up gold and central banks and people all over the world. But then the other part is the technical element, which is ebbed and flowed a little bit. But it's not the only factor that we look at with things like gold and gold equities, but it's certainly one of them that fits into the mix and fits into the equation.
Well, only looking gold as an example through one of those lenses, to your point, Will, could be very narrow. So that's why we need all three. So fundamentals, positioning, and then we've talked about this one probably the most, but maybe just to rehash it and explain in a little bit more detail, kind of the technical piece of the strategy.
Yeah, so technicals really gets into when do you buy it, and the one of the challenges I'd say with technicals right off the bat is it can sometimes be a little bit challenging, a little bit more challenging to explain to investors because fundamentals, you've got a story behind it. When you look at the macro context positioning, there's a story behind it. Technicals is really about price movement, supply and demand, but it's really a very pure representation of what's going on in markets and what's happening underneath the hood. So technicals is really that supply and demand, and so it's things like, all right, if a name's got washed out, oversold, but it's technically strong, it has relative strength, it's presenting a good entry point, good time to buy. If something's gotten overbought, overextended, has run too far too fast, has gotten ahead of its skis, probably makes sense to look to sell it overall. We'll also look at that at sector levels. If a sector is running too hot, or if it's lost its relative strength or its leadership, or for markets or the whole market in general, when you've got supply in control or demand in control, and a market's gotten really oversold and has started to reverse up. So if you've got your company's a good example, but if you've got a great company that fundamentals are very strong and there's a very good story behind it, the macro backdrop, so to speak, the context, the environment is supportive for that stock. And then we start to look and say, all right, the technicals look pretty good here. This is a name that showed a lot of strength, but here it's gone through a little bit of a sell off and is presenting a dip and an opportunity. That's where it's kind of like the trifecta, and all three of those line up, and it's like, okay, that's that's a position that we want to enter. And likewise, that story cuts both ways in terms of selling names or even holding names and wanting to hold on to positions. So the idea is the technical side really helps with the timing element. And I think so many approaches, they really just look at the what to buy, or maybe they just will talk a lot about the big picture and the macro environment and the themes that are out there. But if you've got the what and the why and the when, that's pretty much the whole equation where it lines up. That you can get really great portfolio management, really leads to the best results overall.
Yeah, absolutely. So are any one of these pillars, Will, would you say more important than the other, or do you really need all three of them working together for the best results?
I mean, I think I don't know if I'd necessarily say at this point in the process, my bias certainly would be towards the technical side of it, really because, um, you think of a bad market and a bad market situation, you can have fundamentally sound names,
Yeah.
that that will go down, lose 50% of their value or more, you could also have a view on the macro and the environment and everything that's going on that could be shown to be wrong or early or late, and the macro environment can shift pretty quickly. The thing about technicals, if something is technically sound, by definition, it's holding its relative strength. You can have these fundamentally sound positions that drop in a bad market. You can't have a technically sound position that drops or at least drops on a relative strength basis. And the reason is because if it did drop, it would be technically weak, and that would start to give off triggers and sell signals and warning signs in that. So I think that the technicals are really that kind of special sauce, that secret sauce that gets added in. That to me, if you go and you talk to 100 different portfolio managers, 100 different advisors. I mean, I certainly didn't invent technical analysis, but most of them stay in those first two areas where it's just purely fundamental or purely looking at the macro and environment. Probably 90% of the news that you read are going to be about individual company stories, big picture environment, but the technical side is the timing. So that's the side. But again, I think you need all of these reinforced, right? Because sure, you could have a technically sound stock that's doing well, but you probably want it reinforced by the market environment. You want that position to be fundamentally sound, whether it's sector based or an individual stock or market based. But technicals are the one that protect you more than some of the others for sure.
And, to give a couple examples, you've had recently, it seems like within the last couple of years, like really what have been characterized as fundamentally sound companies. Think of Bell Canada, think of TELUS, think of Thomson Reuters, names like that that have been very seen as fundamentally sound get cut in half because of different reasons. But that's where just looking at fundamentals alone kind of falls off and are not looking at names and positions through these other screens.
Yeah, I mean, that's a very, very good example because those companies in general are probably fundamentally fine. The but the macro backdrop
Right.
certainly hasn't supported them. Things like, well, with Constellation Software, Thompson, those names as the whole macro environment has shifted, and then they technically broke down. So they're just names that you just wouldn't want to own or are not supportive. But yeah, that's a good way of putting it. So we're trying to put together when we buy names or names that we own, or even when we sell or what we're holding in the portfolios, have that trifecta that the fundamentals are sound, the backdrop is there, the macro, the context, the why to buy it's there. But also the when, and working with technical analysis, looking at supply and demand, looking at the heartbeat of the market to get those timing elements right. So I think you have all three of those. That's where it fits in with that idea of be wealthy.
There you go.
We've seen it in August so far, which is good to see. We want you to be wealthy. We want that portfolio growing, humming along, moving in the right direction, which the last few weeks has been nice to see. We want you to feel wealthy when your portfolio is well managed and doing its job. It's easier to be enjoying life and enjoying retirement, enjoying your money. We want you to realize your wealth. That's what we're all about. That's what Aretec Wealth is all about. So we'll be back with everybody next week. Enjoy the weekend and enjoy the summer here.
That's it.